Yeah, so Cipher Pharmaceuticals, symbol CPH on the TSX. It's a company that, like I said, the clients should be familiar with. Keystone recommended the company at $3.89 a share back in August 2023, just under 2 years ago now. But for those who don't know, Cipher Pharmaceuticals is a specialty pharmaceutical company with a portfolio of early to late stage products. Core products include Epuris and Absorica, which it respectively in Canada, the US, and Netroba, which they acquired last year, as well as the Parapro parent company, which is US-based. The stock is now trading at $15.07 share, a $383 million market cap. So that is a 287% return since the recommendation just under 2 years ago now. A part of the initial investment thesis was really cash deployment, as the company had just a massive cash position at the time, roughly 52% of its market cap, as well as positive cash flow within it with its product portfolio, which is quite mature. We saw cash deployment come about a year later with the acquisition of US-based Parapro and its lice and scabies treatment, Netroba. The acquisition was well received, sending the stock as high as $19, up from the about $8 previous to that, $8.68. So over 100% increase, and it was about 2 weeks, but then it settled back down after that. Bit of euphoria there. But the acquisition was and still is a game changer for the company, but it does take time to see the actual financial benefits of the merger. And the benefits are now being shown throughout the last year, but specifically the last quarter has been quite good, to say the least. So moving into the recent jump in share price off the back of Q2 2025 earnings, these results are lapping the last quarter prior to the Netroba acquisition. So we can see a nice before and after acquisition, really comparison. Effectively, the year after the acquisition, I will note that Q3 will not fully be comparable either, as Netroba was acquired in July, so you'd have still a month of without Netroba being included. But continue on to Q2 results. Net revenue was up 152% to $13.4 million. Gross profit up 159% to $10.9 million at a margin of 81.3%. Adjusted EBITDA up 148% to $7.6 million at a margin of 56.7%, which is quite high. Diluted EPS up 83% to 22% a share. Overall, just a substantial increase across the board, but that is also largely due to the acquisition. But as you can see on the chart that I have below the financials there's sequential increases for both net revenue and adjusted EBITDA every single quarter since the acquisition. So Q3 2024, $10.4 million in net revenue, 4.1 EBITDA. We're already significantly higher, especially on that EBITDA line, going from 7.6 or at 7.6 from 4.1. And that's just a sequential improvement since the acquisition has been closed. While the company is now in a net debt position of $14.1 million compared to its prior net cash position, it likely won't be for that long, barring any future further cash deployments, which we do expect. But as you can see, there is quite a consistent trend towards that net cash position, again, barring no further layouts, like I was saying. The company has been actively just paying off its debt, ending Q2 with $25 million left in debt. But after the quarter, they actually further paid off a further $7 million. The company currently has a net debt at the end of the quarter, EBITDA to EBITDA of 0.9 times, which is completely manageable, not a concern in the slightest. And at this rate, barring any further net cash usage, it'll be 2 to 3 quarters before they'll be in a net cash position again. While the company did issue 1.5 million shares in part of the acquisition, causing the overall share count to increase year over year, the company has still been actually repurchasing the shares at the same time as repaying the debt. They have, for the first 6 months of the year, they repurchased 2.1 million or 230,000 shares. So overall, the balance sheet is still very strong given the cash flows, despite using cash for debt and shares to fund the acquisition last year. The company does have the ability to re-leverage itself if opportunities do become available, or they can just continue back into a net cash position if nothing is accretive, which leads us to growth prospects. The company still does have those organic or inorganic potentials with products or companies. Given its balance sheet, they can re-leverage up, like I said, but the organic side is also very interesting at this time. Netroba has the potential to displace the current licensed scabies treatment, permethrin, which holds about a 75% market share in the US, with Netroba at about the remaining quarter. Notably, in April, Illinois updated their preferred treatment for scabies and lice to Netroba from permethrin 5%, which is really a regulatory shift, because you do start to see as states, because they're all regulated on a state level for preferred treatment, once one do it, another one will look at Illinois, for example, and that they can potentially shift. Whether or not that happens, we'll have to wait and see. But that is a good thing to see, is initial states making it the preferred treatment. The next growth opportunity is the company can carry out licensing of its current products internationally, specifically Netroba, for which management is currently looking for the right out-license partner. Then on the flip side, the company can actually look to in-license complementary products, likely dermatology, as it does have a way to market products within both the US with Parapro facility and Canada. Lastly, the company can bring its products across the border, specifically Netroba once again, into Canada, and try to do the same thing and overtake permethrin, which is over the counter in Canada compared to the US, where it's actually prescribed. Depending on the timing of any in-licensing or out-licensing or acquisitions, we could see further jumps in quarterly sales and profitability, but that depends on exactly how and what occurs and when. So quick valuations, the company is trading at a trailing PE of 23 times, and EV/EBITDA of 19.2 times, and a price to FFO of 20 times, which has went up since obviously our first recommendation, but it will significantly come down over the next year if they can continue to hit the same sort of results that we saw in this last quarter. Overall, we continue to like Cipher Pharmaceuticals despite the significant price increase. Since the recommendation, the company has obviously increased the valuation, but at the recommendation, it was quite a different company as far as financials go. It was a very cash-rich company awaiting deployment of that cash, needing proper execution, which does carry a lot of risk inherently to that. And obviously that was a success. So that risk goes away. You would expect a valuation increase occur. And now it has both organic growth, which it previously just didn't have. It had up and down quarters, pretty much mature portfolio of products. They were cash flowing, which is great. And it was a very cheap company. But now we're seeing it move into that more growth stage where they can actually reinvest in themselves over and over again. And that's what we want to see in the future with further acquisitions or licensing opportunities. And the opportunities are really just supported by continued strong cash flows and really an improving balance sheet day to day. Clients will be receiving a full update in the near future. And just for disclosure, Keystone and Keystone employees currently do own the stock.
Yeah, it's a really good summary. I mean, what really excites me is that organic growth that you're starting to see, I think, from Netroba. And, just generally speaking, the treatment versus permethrin, which is like kind of the incumbent, the treatment that's used the most in the US, for example. It's generally considered Netroba to be more effective, require less nit combing than permethrin. And there's some studies that have shown it to be nearly twice to have twice the success rate. So significantly better than the existing product. And again, the fact that it doesn't require nit combing as part of the treatment. I know that Brennan is sick of combing nits out of my hair every time that I get lice, right? So, we just know that alone is probably worth going to permethrin. Permethrin is, going to Netroba over permethrin. Permethrin is over the counter. Netroba is prescription. But, it looks like there's a tremendous growth avenue organically there for them in the US. We'll see. And, it looks like it's going on that path right now. If that can continue, then like Brett said, with the cash flow there, the multiples that we saw should come down if the share price stays in the same range. And it is impressive to see going from that, they had significant cash, paid a good price for the business, but it's actually a reasonable price if it's growing at the rate that it looks like it is now. But go into debt and you're going to pay that off potentially in the next 3 quarters. Like that is going to net cash again. It's tremendous. And then they can, like he said, invest back in themselves again, invest back in the business, buy other, or, grow better organically with maybe a little more promotion. But it looks solid.